open the lesson number. If you have, you might get, this is the linking chapter. Linking chapter in the sense, so many chapters are linked to this. Okay, let me take some. AMT is linked, MAT is linked, though MAT exclusively is altogether different one, but the something you need to understand from this chapter. Next, assessment of firm. Section 10AA is linked to this. And what else? I'm not getting errors. Able to recall these things together along with this chapter. You might get question. You might get question around 40 to 50 marks. You might get question for 40 to 50 marks. Understood? Now you might be realizing how important this chapter is. Okay, this chapter, whatever the linking chapter is there, I will finish off all those things when I am doing this. Done? Okay. Next, this, the charging section is 28. This chapter deals with from section 28 to 44. How many sections are there? Plain, how many sections? How many sections are there? Am I audible clearly? Now is it okay? How
Yes,
many?
16 questions. 16.
Around 16. Okay. If you see plainly, it is 16. I will write it here, 16. But literally you will be studying around 45 to 50 sections in this. There are so many subsections, clauses. Okay, and you need to remember few sections by default. You have to remember. I will tell you which are the sections you need to remember. Please concentrate on that sections. If you know that section, you can easily relate the provisions or recall the provisions. There are few sections in that. Okay, let me start the chapter. Here, there are many. They are given only the few things, not fully. Okay, business means what? Whatever you do for with the intention of profit or without intention of profit also, if you do, that will be called as business. If it doesn't falls under head salary, house property, capital gain and other source, it will fall under the head business. Whenever we say business, business includes profession also. Okay, not go by the definitions because it is irrelevant for me to explain all these things. Please go through the definition of the business and the definition of profession. Okay. It doesn't make any difference whether you know the definition of business or not, but few things in that business you need to remember. From here it starts. Income chargeable to tax under the head business or profession. This head, I mean business head, is applicable to all kind of business and to all associates. It is applicable to all kinds of business and to all associates. And to all associates. Be it individual, HUF, AOP, BO, AJP, everybody who is doing the business, this section is applicable to them. I mean, this head is applicable to them. Okay. First, the scope of income chargeable under this head is covered by section 28. That means there are few clauses under this section. Those clauses which gives the description of the incomes and other related items will only be chargeable to tax under this head. What are those? First one, profits and gains of any business or profession. It's a very common. Whatever the profit or whatever the gain you earn from the business or profession, it will be chargeable under this head. If you earn any profit during the previous year, for our case, what is the previous year? 22-23 is the previous year for us. Any gain or profit earned during this previous year, it will be chargeable to tax under the head profits and gains of business or profession. Clear? This is straightforward one. There is nothing to be, there is no complications in this. Next, compensation. Compensation means what? Meaning of compensation?
So salary.
Salary is for the service rendered. Here in this head, the compensation is, assume that you are doing one business. That business, if anyone doing the business, that business is lost or closed due to some unforeseen actions, in that any person who compensates for the loss of source of income from this source, that is called as compensation. Okay. See, any compensation received or receivable by any person, first one, for managing the whole or substantially whole of the affairs of an Indian company or any other company, or in connection with the termination of its agreement or modification of the terms and conditions relating thereto. Okay. That means you have entered into a contract with some other person for the supply of goods or rendering of service. The contract is for 2 years. Assume with the contract price of 1 crore. Every month you need to supply 10,000 units. That means for the year it will be 1,20,000 units. For 2 years it will be 2,40,000 units. After 3 months or 4 months, they modify the contract. Instead of 10,000 units to be supplied, they require only 1,000 units to be supplied by you. In that case, you have planned for 10,000 units to be supplied, for which you have made the arrangement of procuring the raw material from some suppliers. You hired some laborers, for which you are committed to pay certain salary. Yes or no? If suddenly some modification happens, in that case, your cost becomes more. For that increase in cost, if any compensation received from the customer for modifying the terms of the contract, that compensation received or receivable will be chargeable to tax as business income, because that compensation is received by virtue of modification of the business contract. Have you guys understood? They frame the case study kind of a thing in this. Okay, you need to apply whether it is in relation to business or not in relation to business. If it is not in relation to business, it will not falls under this head. It will go to other source. If it is in relation to business, it falls under this head. Okay. This was the thing I wanted to clarify. Okay, other things are almost similar to this. Next one. Third one. Income derived by a trade, professional or similar association from specific services performed for its members. What is the meaning of this? What is the meaning of this sentence? You guys can able to see, or do I need to zoom it? Now is it okay?
Yes, sir.
What is the meaning of this sentence? Income derived by a trade association, professional association or similar association. Trade association means what? It could be assumed that our company secretary institution. I'm just taking an example. Don't take it anything otherwise. It is like professional association. Or few people will join and form an association. Okay. In that association, there could be two kinds of services which can provide to the members, to its members. One is general, another one is specific. Association will take some amount as association will collect some amount from each of the members as a membership fee. From that amount, it will give some general services applicable to all. Okay. If any service or any other transactions given to all the members in general, it will not be taxable. I mean, you guys are getting no? The transaction is relating to specific services. We are going to study the same thing going forward in one of the section. Okay. If any service has done to any members exclusively for him or specifically for that member, whatever the amount received for that service, that becomes taxable under the head profits and gains of business or profession. Now you got it? Okay. Next, export incentives, whatever you receive, that will be taxable as business income, since the export is related to business, hence it is in collection of the business, it will be taxable as business income, whatever the export incentives. It will be given, all these things are the export incentives. They will give like this only: profits on sale of import entitlement, duty drawback, profit on transfer of duty entitlement passbook scheme. Like that only they give. Specifically they give these kind of descriptions in P&L account. Next, value of any benefit or perquisite. If any benefit you receive from the other person in connection with your business or in connection with your profession, that becomes taxable as business income. Okay. Next, this one mark it as important, 40B. This is what I was mentioning, EAMT, alternate minimum tax and firm. I mentioned here no firm. For this section is applicable, 40B. Okay. Any interest, salary, bonus, commission or remuneration, by whatever name called, all these things are put together, may be called as remuneration except interest, salary, bonus, commission or remuneration, due to or received by a partner of a firm. Even if the partner receives from the firm salary, it will be taxable under the head business. It will not be taxed under the head salary. Remember this. Okay. If any bonus is received by a partner from the firm, it will be taxable under the head profits and gains of business or profession. 1 second. Soily, you have logged into tax class again. Okay. Commission received by a partner of the firm, it will be taxable under the head PGBP. Remuneration, that means any other amount you receive from the firm, it will be taxable under the head business or profession. With respect to interest, we will discuss everything in detail with respect to this clause number 6. In section 40B, we discuss extensively. Okay, just I am giving the heads up relating to these four. With respect to interest, any interest on capital received by a partner from the firm, if it is in excess of 12% per annum, that excess will be disallowed. Up to 12% it is allowed. Excess interest received is disallowed. See the example. A firm pays interest to a partner at 18%. How much interest is allowed? How much interest is allowed? 12%. How much is the excess?
6%.
6%. What they are told? The excess 6% will be disallowed. Understanding?
Yes, sir.
Next, any sum whether received or receivable in cash or kind under an agreement for not carrying, please write, they are given non-compete fee. Non-compete fee means what? If you compete with anyone, if that person gives you some amount, lump sum amount or regular payment, whatever it is, for not to compete with him, whatever you receive, it will be taxable as business income. Example, assume that after you guys qualify, you wanted to start coaching class. What I will do is, don't do coaching class, don't start. Instead, I will give you some amount. You agree, you will not start. The agreement between you and me is that 5 years you don't start any coaching class. For that, I will be paying 1 lakh rupees each year. Each year 1 lakh will be chargeable to tax as business income. Why? You are not competing. That is called as non-compete fee. Okay. Likewise, for not sharing any know-how, patent, copyright, trademark, license, franchisee, etc. to any other person, for which if you receive any amount from the another third party, it will be taxed as business income. Keyman insurance policy, not that important. This is important because the same thing is we are going to study in capital gains also. Okay. Fair market value of inventory as on date of conversion, that will be chargeable to tax as business income. Example, your real estate broker and you have 25 lands. Your business is buying the land, selling the land. Okay. During decides that you will convert all these lands, whatever you have, as your capital asset. That means you will stop doing the business of selling the land. Are you guys understanding? Date also 15th August 23. You decides that in our case the previous year 22. On 15th August 22 you decides that you will not do the business of selling of lands, buying and selling of lands. Instead, you keep these lands as your capital asset. That means for your personal use. Whatever the market value on this date relating to these lands, that will be treated as deemed sale. What is that?
Deemed sale.
Deemed sale. This is deeming provision. Okay, deeming provision means we assume that it has been sold. Which value to be considered? Fair market value on the date of conversion. That will be treated as income. The fair market value of inventory. Inventory means if the real estate agent has the land, land is the inventory for him. Inventory means which he uses for his business. That is called as inventory. As on the date on which it is converted into or treated as capital asset on the date. Which date he converts? That date's FMV will be treated as deemed sales. On this date, whatever the price will be there, fair market value, that will be treated as deemed sale. Okay. The same thing we are going to study in capital gains also. Next, last one. Any sum received from transfer or destruction of any capital asset on which you have claimed the deduction under section 35 AD. This section deals with specified business. Which business? Specified business. Okay. In that case, in this section, it provides that in this case, in this section, it has been provided that if you purchase any asset, normally on which depreciation is chargeable, no, on the asset.
Yes, sir.
Okay. Instead of claiming depreciation, you can claim the value of the asset as a deduction. If you falls under the business which has been specified under this section, except if that asset is land, goodwill or financial instrument. All other assets will qualify as deduction if your business falls under section 35 AD. There are around 14 businesses they have mentioned, given the list. If you are doing any such business and if you have acquired any building, plant, machinery, furniture, whatever it is, you can claim deduction under this section instead of claiming depreciation on that. Okay. When you have claimed deduction under this section, after certain period, you sell that asset, there is a lock-in period. Okay, you should not sell that asset, or assume that there is no lock-in period also for easy understanding. After 4 years, you sell that asset. If the value you receive on the sale is more than the cost, it will not be treated as capital gain. Instead, it will be treated as income from business. Okay, all these things are, you feel like it's a vague. Once we start doing certain, once we start learning certain sections, I will be keep linking all these things. Especially when we are going to study this section, I will link all these things again. Okay, don't worry. I know it is not that easy to understand as of now. Please bear with me. We will do all these things. Okay, how many clauses are there? 10 clauses. All these relating to income. Income, that means if you get any of these things, it will be treated as business income. Speculation business, please read yourself. I will do only which are important from the examination point of view. Whatever I am leaving, I leave only little in the sense few headings I will be leaving. Please read those things. Okay, these are all not required actually. If you guys want to have a glance, please go through that. There is a ICDS is also there. ICDS means Income Computation Disclosure Standards. In that, they have given 10 ICDS that is applicable only to income tax. Like in accounts, accounting standard, in income tax, there is a ICDS standards are there. I will be keep telling which ICDS is applicable to few transactions. Okay, now we are going to start from section 30. Until then, it's all simple theory. Even if you skip, it doesn't have any impact. From this, we are going to start. They have given the list. Okay. Before I start, I will tell you few things. This is the one we need to start. I think you guys have solved final accounts in your degree or in PUC.
Yes, sir.
Okay. In that final accounts, you have prepared trading and profit and loss account and balance sheet. Here we are only concerned with P&L account, profit and loss account. Okay. In profit and loss account, credit side we write sales, all other incomes along with closing stock we write on the credit side. Yes. Who are science students? Ghana, are you science?
Sir, I'm an art student, sir.
Maths.
Arts.
Arts.
Student. Social science.
And Malini, oh, she is not logged in today. Okay. Who else doing this? But you are studying accounts in the finance management accounting and other things. I think you have final accounts. I don't know. I haven't seen the syllabus. Okay. All incomes on the credit side, we record all the incomes, including closing stock. On the debit side, we record all the expenditures, including opening stock. Opening stock is nothing but unsold stock of the previous year becomes the opening stock for the current year. Okay. What I am trying to say is, you get the question like this. In the sense, they may give P&L account. If they give the P&L account, you have to compute the business income taking this net profit as base. You have to take the net profit as base. For this net profit, you need to do what are all the expenditure which has been debited. What are all the expenditure which has been debited to P&L account, but it doesn't pertains to the business. You need to add back. Are you guys understanding my logic? I mean to say my logic in the sense my explanation. While computing the business income, if they have given the net profit, you need to take this net profit as the base. For this, you need to add back the expenditure which has been debited, but it doesn't pertains to your business. You have incurred certain expenditure, but it is not a business expenditure. But you have debited that expenditure to your business. That one you need to add back. Example, I will give one or two example. Okay? Because there are many examples it may come. Income tax paid. Income tax is not the business expenditure. Business expenditure means what? Whatever the expenditure which is necessary to carry on the business, that is called as business expenditure. Example, your profession, company secretary, after you qualify, you start your own practice. If you pay tax on the income, and this is your income, on this you pay tax, assume. That tax will be debited to your P&L account because it has gone through your business account. That amount you need to add back. Why? Because it is not related to any business or profession. Likewise, dividend paid. Dividend is not a business expenditure. If you pay any dividend, you need to add back the dividend to the profit. Okay. Likewise, what are all the incomes you have credited, which is not the business income, you need to reduce from this net profit. Are you guys able to follow? What are all the incomes you have credited to your P&L account, which is not the business incomes, you need to deduct that from this net profit. Example is dividend received is your business because you are manufacturing some articles. If you receive any dividend, is it your main business income? No. Our business income will be sales. To some extent, maybe commissions, discount, those things are our business income. Okay, that you should not touch. Only the non-business incomes you have to deduct. Likewise, interest. You have invested in some company, debentures or bonds, on which you have received interest. That is not your business income. You have invested your surplus funds. That is non-business income you need to reduce. After doing all these adjustments, the resultant figure will be your income from business. Okay, the chances of getting P&L account is high. We need to solve few problems on that. First one. and insurance for building. That means you have a building, company may have a building or a business entity may have a building. For that building, if you have taken it on rent, whatever the rent you pay for that building, it will be allowed as a deduction. One second. Few terms we use. Allowed, disallowed, admissible, inadmissible. These four words interchangeably I use. Allowed and admissible is one and the same. Disallowed and inadmissible is another one. Disallowed and inadmissible is one and the same. Allowed and admissible is another one. Understood?
Yes.
Okay. You guys need to concentrate. I will tell you only few section it says disallowed. Majority of the sections will say allowed. These things are allowable expenditures. If you could able to see this, whatever the section they have mentioned, all are allowables. That means if you have debited the expenditure relating to these businesses with respect to these heads of expenditure, it will be allowed. There are certain exceptions are there. Going forward, we learn. Rent, if you have taken building for rent, if you pay rent to the landlord, that is allowed. That means you can get the deduction for the rent paid. If you pay taxes, municipal taxes for that building, you can claim the deduction of that. If you do any repairs for that building, that repair charges is also be allowed. If you pay any insurance premium for that building, assume that you have your own building. For that, if you have taken the insurance, you can claim the deduction. If you are doing any house property, okay, all these things they have explained. Normally, you get this one rent and repairs for the building you get. Okay, section 30 deals with building. 31 deals with plant and machinery and furniture. Repairs and insurance for plant and machinery and furniture. That means if you have any plant or machinery or furniture in your business for which you have done repairing, or if you have taken any insurance on the plant or machinery, that charges whatever you incur on the repairs or insurance, that will be allowed. Allowed means you can get the deduction. You will not tested anything on this. Now we are coming to the very, very important section. Up to this, any confusion, any doubt, any clarification needed up to this point of time?
No, sir.
Depreciation. This section you need to remember. What is the section number? Section 32. You need to remember this section. I will tell you to remember only few. Out of this, out of those, this is one of the sections by default you need to remember. Okay. What is the meaning of depreciation? Any commerce students? or non-commerce also can tell.
Sir, decrease in the value of assets.
Asset due to wear and tear, passage of time, usage. Okay. If you use any asset, if you buy any asset for the purpose of doing the business, if that asset is used in the business, that is called as usage. You have purchased that asset, but you have not used, but the time has elapsed. In that case also you can claim depreciation on that asset and wear and tear. Okay, this is the meaning of depreciation. Depreciation. They given anything? Diminution or exhaustion in the value of certain capital asset. They have given like this. We understand it in this way. Okay. Next, what are the condition? What are the condition to be satisfied to claim depreciation? Condition. What are the condition? Okay. Assessee must be the owner of the asset. What is the first condition? He should be the owner for that asset. Owner may be real owner or beneficiary owner also. I will not go in depth few things because it will get confused. Second, asset should be used in the business of the assessee. It should be used in the business of the assessee. Okay. Third one, asset should fall under the block of asset. It should fall under any one of the block of asset. I will tell you everything, don't worry. First I am writing the conditions. Okay. First, assessee must be the owner of the asset. Asset should be used in the business of the assessee. Asset should fall under the eligible block of the asset. Okay. If all these three conditions are satisfied, then you can claim depreciation. The question arises, is depreciation compulsory or optional? Depreciation is compulsory. You have to claim. Even if you do not claim in your return of income, the assessing officer will claim that. I mean, he gives the deduction. Understanding right?
Yes.
Okay. Now we will go one by one relating to the conditions. Assessee must be the owner of the asset. That means when assessee purchases. Assume that you are the assessee. When you purchase the asset, what are all the activities it can take place? When you want to purchase an asset, what are all the activities? You will see the asset is good to purchase. When you satisfy that, you will place an order for the purchase. After placing of an order, you will pay the amount, yes or no? Even if it can be on credit, ultimately you are going to pay, right? Now the question comes, since you are in professional course, I will have to tell few things. The question comes, you want to buy one building. What is our previous year? 22-23. 22-23 means what? 1st April 22 to 31st March 23. Okay. You approach the seller to buy a building on 28th March 23 for rupees 20 crores. That seller tells, please complete all the formalities, prepare the document and come to the registrar office. There we get registered. You pay all 20 crores to that building before registration. You pay because he is very close friend of yours. On 31st March 23, you both will go to the registrar office at 4:30. Very good time, you go there. That person doing some other registration, the clock turns to 5. They close the office and they tell that please come tomorrow. It can happen. Okay. In that case, can you claim depreciation on this building for the previous year 22-23? The question. Can you claim? Hello? Depreciation on the said building which is not registered in your name.
No, sir.
Why no?
So because the condition says that the assessee must be the owner of the asset.
Owner means, what is the meaning of owner?
It should be registered in the name of assessee.
Can we take some legal opinion, Gahana? Is registration entitles to be a owner, or when all the formalities have been completed, the payment, everything. Document is also with you. Only the registration is pending. Can you enjoy the building?
So as far as my litigation knowledge goes, registration is mandatory for building ownership.
You have paid the amount, 20 crores. That is evidence through electronic payment mode.
Stamp paper, yes.
Stamp paper, everything. Even assessee has signed, you also signed. Only the registration is
No,
pending.
sir, registration is mandatory if I'm not wrong. Maybe Anjali can help.
Okay. In this case, registration is only a formality. It is only a formality. Assessee can claim depreciation because all risk and rewards relating to the building has been transferred. If assume that registration is not done, you are paid every 20 crores to buyer, I mean to the seller. Building caught fire. Can you say that give back the amount from the buyer, from the seller? Can you ask him to pay the entire 20 lakhs, 20 crores?
No, sir, no.
Why? Registration is not happened, no. He should be the owner then.
Yes, sir, you said it's just a formality in this case. So.
No, I'm not, don't take it my word, your knowledge. I'm just speculating. I'm just having the, what you call, conversation. If that thing happens, will that seller will give 20 crores and he will go simply, please take your 20 crores, let my building goes on fire? What could be the remedy? How the legal works? Because only the formality is pending. Everything, document, everything is given to the buyer. Last minute signing is pending. All risk and rewards relating to even the key has been handed over, everything is handed over, nothing is pending, only registration is pending. In this case, registration is only a formality. All the risk and rewards relating to the building has been transferred on the payment. Okay, hence you means assessee can claim depreciation on the building.